Hello, Rebel Capitalists. Hope you're well. I know I haven't done a live stream in quite some time on this channel. And if you haven't been following the drama, I've just had a lot of problems with my eye, surgery, and then it's got infected. And I've been going to the doctor here in Miami pretty much every single day, other than on the weekends, just to check on it to make sure that the problem doesn't, it stays external. Because if it goes internal, then that's when it could jeopardize my eyesight, my vision in this eye permanently, and we don't want that to happen for obvious reasons. So I got to go to the doctor again tomorrow. Hopefully that'll be my last time, but I doubt it. Probably still have to go on Tuesday as well. So anyway, that's why we got the glasses, and that's why I'm in a hotel room. And that's why I haven't been doing much, haven't been producing much content. So as soon as I get back to 100%, cannot wait to get back to doing whiteboard videos and these live streams every Sunday evening. So let me dive into your questions and see what we got. It's a little hard for me to read still, so you'll have to bear with me. All right, what would you recommend to someone who is 18, soon to graduate high school, currently have no money? Once I graduate, we'll be able to make 40. Well, I mean, the same thing I recommend. Well, maybe you haven't heard what I usually recommend, but first I'd look into house hacking once you get a gig. And assuming that you can buy a triplex, I don't even know what the prices are now. And I know that the prices are extremely high and whatnot, but that's for someone who's really looking at this as more, meaning the asset, as more of an investment. You're looking for appreciation, or you're looking for the right time to buy. And a young person at 19, 20, 21 years old, if they can get a triplex and get enough rent, and assuming it's in a good part of town and whatnot, and get enough rent for the other two to cover the mortgage and all the expenses, that's let's just say the price goes down by 50%. Who cares? I mean, you're not selling. You're not going to sell that thing for 30 years or however long. Who cares what the price does? The key there is to eliminate your housing payment, because other than taxes, people's housing payment is usually their number one expense, either rent or mortgage. So if you can eliminate that completely, then that will allow you to put an extra, call it $1,500, $2,000 a month into a investment portfolio, and it will allow you to grow that portfolio much quicker than if you had a housing payment. So that, and I know that's probably not doable in a lot of markets, but if it wasn't, if at all possible, I'd try to move to a market where it was, maybe a more linear market. What else would I do? I'd learn a side hustle in flipping something. As most of you know, as a hobby, when I was helping out my younger brother, I was flipping trucks. That's something you can do pretty much at any age. I don't know if you'd want to do that, but the concept is the same. You learn the price of something like the back of your hand. You become an expert in it, and then you buy it cheap locally wherever you can find it, and then add value, and then sell it to a national market. For me, that was Craigslist, local, national market, eBay. And then I would do that to also build your investment portfolio. And the cool thing about the side hustle deal, assuming you're adding value, that's going to teach you the principles of real estate. So let's just take two examples here. Number one, what I just said with trucks, I would find a truck that was in high demand, and I would fix it up, clean it up, fix any maintenance issues, clean up the cosmetic stuff, and then I would go ahead and flip it. Okay, but what am I doing there? Well, I'm trying to get a good deal. I'm negotiating price, and then I'm managing subcontractors, and then I am marketing the end product. Okay. Let's, as another example, look at what my good friend Kenny Mcelroy does. If you guys don't know Kenny, he is one of the top real estate investors in the multifamily space, apartments in the United States. And as far as private investor, he's not one of these huge private equity funds like Blackstone or something. But as far as just kind of in the small pond, if you will, he is definitely the biggest fish or one of the biggest fish. And he's Kiyosaki's rich dad advisor, I believe, in real estate investing. He manages about 1.5 billion with a B. And what does Kenny do? Well, Kenny finds a good deal. He negotiates a price. He manages subcontractors, and then he markets his end product. He doesn't like to sell, but he has to market in the form of renting out his units. That's marketing to the general public. So think about what I was just doing as a fun little side hustle, just to keep myself busy when I was helping my brother. And quite literally, it's with the exception of raising money, it's identical to what Kenny does. Now, with my little side hustle, let's say I was making 20 grand a month, and I won't tell you what Kenny makes, but he doesn't fly commercial. I can tell you that. In other words, he's got his own jet. You see, so if you can learn the concepts at a young age with not much capital, you can apply that and scale it. So by the time you're 30, 40, 50 years old, you're taking those principles and you're applying them to bigger and bigger and bigger deals. And then you're the next Kenny. So those are the two things that I'd tell you right off the bat. As far as the third thing, you got to read the Market Wizards books. And I would start reading Thomas Sowell. Is there a correlation between the increase in the dollar and the DXY in the U.S. stock market? No. Other than the higher the dollar goes, the more risk there is to, the more downside risk there is to risk assets. So, because what the dollar is telling you is that there's fundamental problems in the global economy. So how long those fundamental problems go until you see a black swan type event or some type of crisis, probably sooner than later. Who knows? No one can predict those things. But the dollar going up is not a sign of economic health globally. That's for sure. Power out in Puerto Rico? Doesn't surprise me. But I'm not in Puerto Rico. How long do I think it'll take the Fed to get inflation under 2%? I don't know that the Fed will. This is an interesting question. I don't know the Fed will get inflation to 2%, but that doesn't mean that inflation won't get to 2%. Let's go back to the GFC. And for, what was it, maybe half a year or so, we had actual deflation where prices went down as measured by the CPI. Now, was that a result of, did the Fed do that by raising it? Kind of. I would say maybe indirectly. Here's my point. Let's just say that the Fed gets up to 3.5%, 4%, whatever, which, by the way, I want to say I need to admit being wrong on something. I didn't think the Fed could get rates higher than 2.25%. Why? Because of that long-term chart where, going back to 81, every time they raise to a lower threshold before they break something. So I was dead wrong there. But my point is, if we have, like, look at the dollar. Let's go back to that, the DXY at 110. Look at what the bond market is telling you. Go with the Eurodollar future curve. There's a lot of metrics that are waving a red flag. So if you have, or look at the cerveza sickness, right? That got us down to 2%? If we had another, not that we will, I'm not predicting this, but if we had another cerveza sickness, that would get us down to 2%. Yet that's not the Fed getting us down. You see? So I think the probability the Fed directly gets us to 2% is pretty darn low. But that doesn't mean, but I think the probability of a financial crisis or maybe an energy crisis, I don't know, taking inflation down that low, I think the probability of that is far higher. That's not to say that the decade isn't still inflationary, because I think it will be for the most part. But just look at the 1940s. I mean, everyone goes back to the 1970s, and I get a little frustrated there. Okay, but this is I think this is far more similar. And I got to give a hat tip to my good friend Lynn Alden. She started talking about this way back, that it's really more consistent with the 1940s than the 1970s. And so 47, we had the CPI peak out at 19.5%. And within, what, a year or two, inflation was -3%. -3. Was that because of the Fed? Nope. Had nothing to do with the Fed. So this is, you see where I'm going with this. And hopefully that'll help you make better decisions. It's a very, as you guys can tell from the last 2 or 3 years, inflation is a very difficult thing to predict. It's not just about the Fed's balance sheet. A lot of people like to oversimplify it and say, oh, well, it's, the Fed's balance sheet, they're reducing it, therefore this. Not really. When you truly understand the balance sheet of the commercial banking system and how it works, and think through dollar creation, the extension of credit, if you want to call that money, how money is created. If you truly understand that, you realize that the Fed doesn't have a lot to do with that. So anyway, don't want to get off on a tangent, but that's my best answer. Will I be doing another Rebel Capitalist Live in Houston? Well, I will be doing another Rebel Capitalist Live in Texas in April of next year, the end of April, I believe. And we should have that venue solidified. We should be selling tickets right now. But I've been out for now going on 6 weeks, probably, with my eye, and I can't. I'm frustrated as heck, I can tell you that. Just the lack of vision in one eye makes it so if I do this too long, I get headaches and I get nauseous, and I won't go on, bore you with the details. But the answer is it's my fault. We should have that set up. Angelique, who runs that for me, is chomping at the bit. She's ready to go. We just haven't set it up yet. I haven't signed the paperwork because I just have felt like crap. So that said, I'm not sure if it's Houston or it'll be Dallas, but it will be in Texas, and it will be most likely the end of April in 2023. Why does it seem like nearly all financial assets are correlated to the debt market? Is there really an uncorrelated asset class other than goods, services, and I mean, technically Bitcoin is supposed to be uncorrelated, but it doesn't seem to be that way right now. Gold, silver, I'd say commodities, but I guess that would be goods. So yeah, other than gold or precious metals, yeah, I think that's the best you're going to get there as far as an uncorrelated. Although foreign real estate, I would also maybe put into that bucket. I don't think real estate in St. Bart's, well, that might be a little tied to debt market. Because if billionaires have less purchasing power, that might affect the real estate prices in St. Bart's. But someplace like, well, Colombia, probably not going to affect the prices in Colombia. Other things affect it, but it's a non-correlated asset. Real estate prices in Thailand, real estate prices in Russia, if you want to go that far, probably not going to be too correlated to the U.S. debt market. Do you think the end goals of the CBDC, surveillance control, the AI brain cloud, could eventually require getting rid of commercial banks too? But so getting rid of commercial banks would not more effectively track that. That wouldn't do anything. Because, let's see, I'm trying to think of a way to explain this. If you say you have an account right now with Wells Fargo, and I've never gotten a mortgage or anything like that. I've gotten lines of credit and whatnot, but not a direct mortgage. But let's just say that you got an account with Wells Fargo and you go to a mortgage broker to get a mortgage for your house. That is going to show up on your bank statement for Wells Fargo. Or let's just say that you get the loan, it hits your bank, you pay for the house, blah, blah, blah. Those transactions going back and forth, that's going to show up on your bank statement. So with a CBDC, you would have your account would be a liability of the Federal Reserve. In other words, every single transaction you did would show up on your bank statement that you would receive from the Fed. So the commercial banks would basically just be a middleman, just kind of like mortgage brokers are today. And in all honesty, that's kind of what most banks are too. They're pretty much just loan originators, meaning that they don't really keep the debt on their balance sheet. It's either going to be backed by Fannie and Freddie. It's pretty much they're just mortgage brokers essentially. They just create the mortgage and sell it to Fannie and Freddie, and then Fannie and Freddie just package it and sell it to Wall Street. And there you go, mortgage-backed sausages. So, how much like SBA lending and lending on cars and whatnot, and I mean, even that debt's probably sold off their balance sheet. So, I mean, I'm sure you can find local small community banks that keep debt on their balance sheet. But these big behemoths, they're already basically branches of the government. So, personally, I don't think much changes. It's just your account goes from being a liability of Wells Fargo to being a liability of the Federal Reserve. So my point there is, even if the commercial banks exist, this will not affect the authoritarians or central planners' ability to monitor or use surveillance to track what you are doing with your spending. How do you know when something has already been priced into the market? Well, that's a good question. I'm not sure. I've never really thought about that. I think the reason I've never really thought about it is because I don't really try to predict the direction of the market. I don't try to predict the direction of the price of any asset. I just try to buy things when they're cheap and sell them when they're expensive. So if I'm only trying to answer that question, is it cheap? I really don't have to think about whether or not something has been priced into the market, because that's not relevant information. So I'm not saying that what you're doing is wrong, but by any stretch. But I'm probably not the best person to ask. This would be more of like a trader, like Patrick Ceresna, probably Lynn Alden, Chris McIntosh, Tony Greer, people like that would. I don't know if you have access to them. If you're on Rebel Capital's Pro, you got access to those people. So definitely ask them that question. Central bank digital currencies, you said in the past commercial banks could exist alongside. Yeah, exactly. What event do you think could require all commercial banks to be absorbed into the Fed? But they're already absorbed into the Fed. I mean, they're already regulated by the Fed, the government. I mean, I don't understand why the Fed would want to absorb them. I don't understand why they would want to be absorbed. I don't understand the benefit of absorbing them. You know, the only thing the Fed would want to, or the only thing the central planners would want to do, is just bring the liabilities of the deposit liabilities of the commercial banking system onto the Fed's balance sheet. That's it. Once they do that, it doesn't, what the commercial banks, that they don't matter at all. The commercial banks don't prohibit the Fed or the central planners from doing anything. Once those deposit liabilities are a liability on the Fed's balance sheet. And if I'm the Fed, I want to keep the commercial banks, again, just as a liaison. So I don't have to deal with the general public. How long do you think it'll take until the Fed can get, okay. Question, assuming we see mass residential defaults and foreclosures, would you expect that mass to be a solid wave or more of a trickle? It just really depends on the next financial or the next economic crisis. How long does that last? Yeah, I've been trying for whatever reason, I've been trying to think through black swan type of events that are totally off people's radar. And one of them would be a loss of confidence in the Fed and in central banks. Or really the Fed, because if you think about it, the Fed is the only central bank that people are confident in. Look at the BOJ. Look at what they tried to do. Didn't work at all. They tried to prop up markets. They tried to do this. Nothing worked. So it's. I don't think it's true to say that people have implicit or complete faith in central banks. No, I think it's really just the Fed, maybe the ECB a little bit, but more so the Federal Reserve. So I think that if confidence was lost in the Fed, meaning that there's no longer a Fed put, that would be a wave of deflation in asset prices, maybe like we've never seen before. But outside of that, as far as I think what your question's more pertaining to is if mortgage rates continue to go up, it's going to just gradually, it's going to make housing more or less affordable. And at some point in time, all these people that only put 5% down, which the majority of people did over the last few years, when do they lose equity? When do they give back the keys? And does that result in nominal prices crashing or just going down slowly? The answer is slowly, trickle, if you want to use that word. Real estate just, and outside of what I was saying with some black swan, it doesn't crash. It just doesn't. Like real estate crashed in Colombia in what was it, 2000, 2001, rebounded very quickly, but it crashed. Like we're talking 50% in a year. Why? Because it was basically invaded by the United States. They say for the drug guys, maybe that was true, but the US brought in helicopters and shot up the place. So if China drops I mean, heaven forbid, right? Well, let's just go another route here so we don't get too negative. But if China brings in helicopters somehow and shoots up San Francisco, I guarantee you those prices are going to go down fast, right? But outside of that, real estate doesn't crash. It just doesn't. It goes down, absolutely. It takes a long time. It takes 4, 5, 6 years. So I would consider that a trickle. You got to put yourself in the position of a homeowner. And you're always going to be looking at what the prices were. You're going to be looking at Zillow. Oh, my neighbor got 500,000 and my house is better because it has upgraded floors and a veranda, blah, 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 blah. So I should be able to get 550, and then you don't get it. And then it takes a long time because so much of people's net worth is tied up in their house. It takes a long time for them to start lowering prices. So it is possible for a solid wave or nominal prices just to crash, but not as a result of something happening internally or that's exclusive to the real estate market, i.e. mortgage rates. I think that's the best way to think about it. How much longer can Japan keep the 10? Well, forever. It would just blow up their currency forever. How long will they? I don't know. I find it fascinating that 2019, I remember because it's right around when I started my YouTube channel. We were talking about how remember we were in a currency war. Remember? Currency war. What does that mean? That means all these countries are trying to devalue their currency to give a boost to their exports. Now, all of a sudden, when their currencies are going down and rapidly going down, all of a sudden, this means they're doomed. Now, I'm not saying that Japan is a great place or fundamentally sound, but I am saying it's interesting how the media, the financial media, looks at the exact same thing two completely different ways based on what narrative they want to spin. If we're in a currency war, then damn it, those Japanese or Chinese or whatever, they're currency manipulators. They're trying to get their currency down, and we don't like that because we want our currency down. But now that they bring their currency down, we're like, oh yes, that's great. We got the strong dollar. It's great. It's awesome. It just shows how weak Japan's economy was. You're like, wait a minute. Back a couple of years ago, weren't you arguing for the US dollar to go down because that would boost manufacturing? What happened to that? Oh yeah, that's old news. So my point is, to answer your question directly, forever. To answer your question, maybe in a more indirect way or a more relevant way, how long can they keep it there? Or how long will they, excuse me? I think it might depend on oil because they've got to import so much energy and they got to do that in dollars. And if the yen goes down too low, then that means the cost of energy goes up too high. So I think that the energy market is basically Japan's constraint right now on the 10-year JGB. That's just me thinking right off the top of my head. So if energy prices go down, I think they can sustain that a lot longer. Energy prices go way up, they got big problems. They're not going to be able to hold that too much, assuming that it's putting further downward pressure on the yen. Thanks for all the well wishes, guys. Just seeing those, I appreciate it. What countries would you recommend someone in their 20s should move to or spend time to increase their capital? Cheap, 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 cheap. Good internet and cheap, because then you can take all the money you're making, assuming that you're making the money online or you got a remote gig, and you can just lower your expenses. I mean, you're basically doing the same thing or using the same concept as what I was telling the 18-year-old kid who is graduating from high school and asking for some advice by buying a triplex. You're lowering your monthly expenses to where you can put more of your monthly income into growing your portfolio, or maybe starting a business or doing one of these things that's going to be able to put you in a position long term where you'll most likely have quite a lot of financial freedom. So specific country, I mean, Colombia is just obnoxiously cheap. And the good news is if you are earning dollars, you got a lot of purchasing power right now. And I would say there's a pretty high probability that that's going to increase before it decreases. Obviously, short term, it goes up and down and up and down. But I'm just saying over the next 2 or 3 years. So, I've been all over the world, and I don't recall going to a country that's as nice, where the standard of living is as high, food, weather, people, etc., that is as cheap as Colombia. And you're a 3.5-hour flight from Miami direct. So if you have to go to an eye specialist like this guy, you could just hop on a plane and you're right there. Same time zone as the United States as well. So that's always nice if you're doing business, most likely with US companies or something like that. That's where I'd start. I mean, Mexico is pretty, I would look there for sure, especially if you're in the US. I'm assuming you are. I think Mexico is kind of a no-brainer. Mexico, Colombia. But you want to be nimble because neither of those countries are perfect. So I wouldn't take the vegetable route where you plant roots and you can't leave. I'd go there, enjoy yourself, but to be nimble. If you want to go over to Europe, if that's more your style, Croatia and Montenegro are fantastic. Your housing expense is going to be substantially higher there, but the food and whatnot and the other living expenses are pretty consistent. Well, maybe a little more expensive than Colombia, but just fantastic places to spend time. As far as Asia, I haven't spent much time in cheap areas. I was in the Philippines for a bit. I didn't really like that too much. But the places where I've spent most time in Asia are the opposite of where you would want to go. That being Hong Kong and Singapore, two places that are ridiculously expensive. So that's probably where especially if you're in the States, that's where I'd look first is Mexico and Colombia. Thoughts on timeline with USD losing reserve status? Long time. I wouldn't hold your breath. 10 years, 10 plus years, I think. And even, I don't even know what that means. Reserve status. How would you define that? Are things still priced in dollars, but we're settling in other currencies? Is it where the majority of assets on central banks' balance sheets are something other than the dollar? I don't know how we really define that specifically. But I think you're probably talking about how long before the dollar crashes as a result of X, Y, and Z, and a long time. Another black swan event, though, and that's if marked by market forces. Let me be clear, because I think you could have the dollar lose reserve stat or crash, if you will, by just the central planners and the authoritarians mucking it up. So, as an example, let's say the dollar goes up to 120, 130, and it starts creating a lot of problems, not only globally, but systemic problems for the United States, to where we have a Plaza Accord 2.0. And then let's say the Fed has to print up bank reserves to buy yen and euros and X, Y, and Z to flood the global markets with dollars to bring the value of the dollar down against those other currencies. I think we could be in a situation where they do that and they overshoot and they don't understand the unintended consequences of those types of actions. So although their target range is to bring the DXY down to 80, let's say, inadvertently, they bring it down to 20. And you have some sort of dollar crisis on the opposite way. So you have a dollar crisis on the upside, and then by the central planners mucking it up, then you have a dollar crisis on the downside. I see that being far higher probability than the dollar losing or crashing as a result of just market forces or something that Russia is doing by pricing oil in rubles or transactions between India and Saudi Arabia and China where they're settling in some other currency other than the dollar. George Friedman said in an interview that the wrong kind of growth can actually kill a company or economy. Even if cash flow increases proportionally with volume, how is that possible? I don't know who George Friedman is. Said in an interview that the wrong kind of growth can actually kill a company or economy, even if cash flow increases proportionally. Yeah, I mean, look, when you're growing a company, and the highest I got to was about 100 employees, but I've experienced the different stages where you're just a startup and you got 5 employees, and then you got 20, then you got 50, then you got 100. And you can definitely grow too fast, for sure, even if the cash flows are keeping up, to a point where you can't manage the staff and everything just goes crazy and it completely implodes. So that's actually very easy, a lot easier than you would think. If you don't manage the growth wisely and create structures and systems along the way, and hire the right people and motivate them and do a lot of these things, you're going to create the monster that you become a slave to. I've done that. So, and again, to be clear, that's even if your cash flows are keeping up. You can still, if you don't grow wisely, you can create something that's just, it's going to completely implode, regardless of how much money you're making. It's just a matter of when, not if. So that's for the companies that now, as far as an economy, if you've got a completely free market economy and it's growing from the bottom up, I don't know. I mean, you're always going to have boom and bust cycles, even if. So yeah, I mean, I guess that would answer your question. With an economy, even if you have free market capitalism, you're going to have boom bust cycles. And with a company, I think I answered that on how that could happen. Actually, quite easy, a lot easier than you'd think. What other two countries would I live outside of Colombia? I mean, probably Mexico and maybe maybe another one I forgot is Turkey. Turkey looks pretty good, especially if I was young and nimble. I might seriously consider Turkey. So probably Mexico, Turkey, UAE, Dubai. Those are probably the places I'd be right now. Stressing that you would need to be nimble. I'm not saying that I would go to Turkey and buy a house with my kids and put them in private schools and plan to spend and commit to it for the next 20 years. I'm not saying that. I'm saying if the way I live, listen, if I don't like someplace, I'm gone, and I can be gone tomorrow. And I know most people aren't like that, but even if I had a kid or wife, stuff like that, I think I could still be pretty nimble. A lot. I think it's kind of a mindset more than anything. So, with that caveat, I would say Mexico, Turkey, UAE. What do I think about de-dollarization? Yeah, I think I probably touched on that or answered that question when I was talking about the dollar earlier. How much more time do you think for the sovereign debt crisis? I don't know that. See, this is something that doesn't make a whole lot of sense to me. It's I hear all the time people saying, well, if the Fed takes up rates up too high, then the government's not going to be able to afford it because they've got to roll over all their debt, and their interest payment on the debt would become unpayable. I don't get it. Just walk me through what that looks like. I don't know that too many people have thought that through. What do you mean? Does that mean that the government can no longer sell the treasuries in order to pay the interest? No, they can still do that. And then I guess the rebuttal would be, well, George, at some point, no one's going to buy the bonds and the Fed's going to have to monetize it all. And then everything's going to blow up. Okay, but the people with that argument, I think, would have argued that back in 2019 if I would have told them the government was going to run a $5 trillion deficit and was going to have to sell all that debt. And the Fed was going to have to, the Fed was going to, if you want to use the word monetize, again, I don't really like that word either, but the Fed's going to buy a bunch of bonds through QE. I don't know. They were interest rates, the long end of the curve didn't explode in 2020. So let's just say that the average rate of interest on the total debt goes from 2% to 4%. Okay. I'm not saying that's good. I'm not saying I like it. I'm just saying I don't know. That doesn't mean the U.S. can't afford, because they can always just sell more bonds. And then the next question becomes, well, is there going to be a market for those bonds? And I don't know that's something that you can predict, because you sure as hell couldn't have predicted it over the last 12 years. That's for sure. I mean, if I would have told any of these people back in 2007 that the Fed's balance sheet was going to go to $4 trillion and the U.S. deficits would blow up the way they have, they would have said that the U.S. government couldn't have afforded that. But they did. And look at Japan, for heaven's sakes. You got, what, 250% debt to GDP? Can they afford that? I mean, they have up until now. You have to remember, and this is maybe a contrarian view that I have, and I went over this in a few whiteboard videos, but it's been maybe a year or so. The damage to the economy is done when the government spends the money. You see, what most people do is they try to think about, well, how is the economy going to be affected when the government can't afford the debt payments anymore? Or what's going to happen to the economy when it can no longer afford to pay Social Security, unfunded liabilities? What's going to happen to the U.S. economy when blah, 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 when the chickens come home to roost? This is basically the concept. In my opinion, the chickens have already come home to roost. That's what people don't get. And what made me come to this conclusion was going through the thought experiment of Japan. And I would listen to Bill Fleckenstein, who's someone who's fantastic. And I've had the privilege of interviewing Bill on this channel. And I remember he posed the question, well, why couldn't, what would happen if Japan just had a debt jubilee? Because 60% of Japanese government debt is on the balance sheet of the central bank. So if they just woke up one day and hit the delete button on the 60, on all the JGBs that the central bank owned, you would pretty much have the liability side of the government go down and the asset side of the central bank go whoop, down. Would anyone know? If they didn't announce it to the media or the public, Would anyone know? I don't think so. And even if they did announce it, do you think what would happen? Probably nothing. So you say, oh my gosh, George, well, they're a free lunch. That's a free lunch. Then why doesn't every single government, run up these big debts and then just do a big debt jubilee? You're missing the point, you see. The point is the damage is done to the economy, not when you do the debt jubilee. The damage is done to the economy when the government spends the money to begin with. The price has already been paid by the economic distortions, malinvestment, misallocation of resources that has hampered growth, i.e. Japan, what we've seen for the last 40 years or 30 years or whatever. You see, that's a result of government distorting and the central planners distorting the economy and having lower than trend growth or subpar growth based on the capacity that your economy has to produce. So you see, the price is paid as the government spends the money. So you could have a debt jubilee. The U.S. government can go to 250%. It can afford the interest. It can do all these things. That doesn't mean it's a free lunch. That just means, so my point there is, I think people are focused on the wrong thing. They're focused on like the end game. What happens when the U.S. can blah, 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 X, Y, Z, fill in the blank. But what they don't understand is that's not the problem. The problem is the government spending. It's the heroin addict, right? And this is the example I used on the whiteboard. Let's just say that a heroin addict had a credit card and he ran that credit card up to $100,000 by using more and more heroin that got him more and more addicted to the drug, destroyed his body, and further destroyed his mind. And let's say you went to that heroin addict and said, hey, guess what? I'm going to give you a debt jubilee. I'm going to pay off your credit card and take it right back down to zero. What happens? Doesn't matter. Is he better off? No, he's worse off. The damage has been done by doing the heroin in the first place. Did he get a free lunch? No, because he's almost dead. And I would argue that giving him that debt jubilee, now the economy is even worse off because the government is in a position to where it can justify spending more, which inflicts more damage on the economy itself. So I think I've really, that's the way I look at things. I don't look at, what disaster is going to happen because of X, Y, and Z. I just look at the disasters have already happened, and they happen every single time the government spends money. It's a rolling disaster, just like the heroin addict inflicts more damage to their body every single time they shoot up. Do I think the markets have bottomed? Let me preface the answer by saying if or assuming we are in a bear market, and only time will tell. But let's just assume for a moment that this is a bear market. We are not at the bottom. Now, this may not be a bear market. We might not be in a recession, technically, by the government's definition. I don't know. But if we look back in 3 or 4 years or whatever, and say, yep, that was definitely a bear market for sure, we are not at the bottom. Why do I say that? Because when you're at the bottom of a bear market, well, it's when nobody, including you, including Steve, including the people asking these questions, including me, nobody wants to buy stocks. Nobody. It's so hard to buy at the right times, even for the experts, because every single cell in your body is telling you, don't buy. The market is still going to go down further. Let's think about from a mechanical standpoint, what creates the bottom? It's when everyone's sold. There's no more sellers. So the only thing you have left are buyers. So even if there are very few buyers, it still makes the price go up because everyone has sold. So I'd ask you right now, with the stock market, has everyone sold? Rhetorical question, right? Are there no sellers left? Have we hit capitulation? Go back to the 1930s, 1940s and whatnot. That's when you know that you're at a bottom. Or go to the early 1980s, when nobody wants anything to do with the stock. I mean, nobody, zero. I mean, just the other day, I sent out a tweet on some company that sends stuff to the moon that just went public via a SPAC. Okay, that you don't see that at a bottom. Go back to, I don't know how old you are, Steve, but if you're as old as I am, I mean, just think back to 2009. The bottom of that bear market. Remember CNBC? I mean, the world was coming to an end. Nobody wanted to buy stocks, to the point where everyone that was going to sell sold. And the only thing that was left was buyers. Same thing with the real estate market in 2012. And it's hard to remember now, but I remember it vividly. That nobody wanted to buy a house. Real estate was the worst investment. Everyone was saying that. It's only going to go down. We haven't even come close to the bottom. All the sellers were gone. So my point is, we're not even close to capitulation right now in the US stock market. Not even close. Because if we were close, no offense, but most of us would not be asking that question. We wouldn't be asking the question if we're at the bottom, because most of us would know and feel with every bone in our body that we're not even close to a bottom, that it's going to go down forever. When you have that feeling, then your spidey senses should tell you we might be close to a bottom. Investing well is very, very, very difficult. And if it's easy, that should be a red flag, right? If buying a stock is easy and every single cell in your body isn't screaming at you not to, then you're probably doing something wrong. All right. Okay, guys, I got to head over to the live stream for the Rebel Capitalist Pro. If you guys want to check out Rebel Capitalist Pro, cannot suggest it enough. It's the online forum that I have with my good friends Lynn Alden and Chris McIntosh, and there's some other pros over there like Jason Hartman, Brent Johnson, Patrick Ceresna. We do live streams like this with our members, and it's got some research from Lynn and Chris that's just absolutely awesome. So you can check that out at georgegammon.com/pro. Let me go ahead and do some shout outs. And we've got Florida Rich in the house, UFO Nut, Crypto AZ, St. Louis, what is that? I don't even know Roman. I think that's a fourth. Sustainable Lumber Company in the house. Good to see you, my friend. Boy Newen, Justin Fats, All-Nighter Hider in the house. Good to see him as well. Spock 2024, Reactionary Libertarian. Holy, okay. Gym Time UK, Malaysian Numismatic Bulldog, Matt Bittner, Don Anderson, Cooper Cox, Owen Thomas. All right, guys. Enjoy the rest of your evening. We'll see you in the next video.